It's about that time of day again. Welcome to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, April 27th, 2015, squeezing the last few drops of this month of April. Hope you guys had a good weekend, by the way. Beautiful weather here in Los Angeles. Hope you guys get some of that beautiful weather wherever you're viewing this video here. In tonight's newsletter, crude oil. Yeah, the black gold, it's trading inside a wedge in the long term. Very range bound in the long term right now. But wait a second. Short term, we have a bearish trend. We get a trading range and a bearish trend. We get some excellent clues going into our session on Tuesday. If you're a crude trader right now, you want to stick around for that. How about gold? The yellow metal trading all the way in the nosebleed seats tonight, all the way at the highs of the range this evening. Now, if you followed our newsletter last week, I hope you did. If you're brand new, though, not to worry. I'm going to give it to you again here. If you followed the newsletter last week, though, you recall our plan was to what? Fade the breakouts, fade the highs, fade the lows, and we're going to do a lot more of that on gold here tonight and get you ready for some more opportunities on Tuesday. Before we begin, please remember everything I'm going to cover here tonight, I teach to all of our students here at School of Trade. And also, I want to remind you guys, make sure you're watching our video at sidewaysmarkets.com. There are 3 reasons why. First of all, you can download all my charts. The link is right below the video. All the charts I'm going to use tonight, you can download them all by following that link below the video. I got a free pass for you to come out and test drive my live trade room as a guest and a nightly newsletter mailing list. All I need is your name and your email address, and I'll send you an email every evening right before the newsletter goes out. That way you know exactly when to go out and watch the newsletter. All right, so download the charts, grab your free pass, and don't forget, register for your newsletter mailing list. If you register for the mailing list, I'm going to send you a verification email, so make sure you check those email inboxes so you don't miss anything from me. All right, let's jump right in here this evening, starting with the funny yellow metal they call gold futures. Couple things here on the gold. Busy day out there. Boy, right at 10 o'clock, someone lit a fuse out there on this gold market. Gold trading up at the highs of the range, just above the bear channel. Okay? Just above the bear channel, right? The little Chanel we have here going down. Okay, got the channel. And, of course, just above the highs of the wedge. Now, this wedge wasn't like this last week, but, that low we saw early this morning. We're all the way here now above this wedge or this triangle. Okay. So that's where we are right now. We know this market is range bound, right? Unless you've been living under a rock the past few weeks. The market's range bound. But we can definitely see a bearish tone to it. We're getting lower lows, lower highs, with the exception of today's price action, of course. And what I always say is anybody can put together a one-day rally. Any market can put together a one-day move, but can you hold it for tomorrow? That's the big question mark right now we have for the buyers on the gold. Let's see what else we have here. We know we have a bearish tone, so we definitely want to be selling at resistance levels, right? You're in a downtrend, you're in a bearish trend. The plan is to sell at resistance. Use support levels as targets, right? So we got some good targets waiting for us here. And we have some pretty good resistance overhead up here, right? 1207, 1213.7, 1218, right? Get a lot of resistance, and we got some good levels of support, okay? Sell at resistance. Take your profit at support. Okay, let's keep going. Start talking about some clues here right now, okay? This is the easy stuff. Here comes the more advanced stuff. Undershoot. Now, what is an undershoot? Well, markets tend to repeat themselves. Why? Because they're filled with who? Humans. And we know these humans that are running around, right? They're habit-based creatures. We know the reason why we get into habits is because our brains are actually hardwired to do that. Your great-great-grandparents passed you on that trait. You know what it is? It's basically when the brain picks up on some repetitive motion, it actually remembers it, because it's trying to save energy the next time you do it. That's why brushing your teeth and combing your hair and driving to work in the morning can be almost done blindfolded. Don't drive blindfolded though, kids, right? Wear your seatbelt too. So we know that the brain loves that stuff. And so the markets have a tendency, right? In this case, measured move. Check this out. Measured move. Yeah, remember? Markets tend to move in these repetitive motions. We didn't even get down to that measured move. What? There's clue number one. Undershoot number one. Right? Bear channel, draw the channel off the highs, copy it down, fits like a glove. What? Yeah, undershoot. So when you look at it that way, it's very obvious why we jumped right back up, right? The sellers were clearly weak. We know that about gold right now because we know this is a range-ish, right, range-bound market with just a little dash of bearishness to it right now. Okay, so we're going to err on the side of selling at resistance. Yeah. We talked about that already, right? Sell at resistance, take your profit at support, right? Okay. So the undershoot really pokes a lot of holes in these buyers' strength, in my opinion, right? We can almost see right through the buyers here and go, come on, buyers, you got to give me more than that. You got an undershoot at the lows. This tells me the sellers weren't anywhere to be found, and you just ran with it, and you got away with it today. Now I want to see if you can hold it. Because this overshoot looks just about right. You know, the amount that we undershoot, usually it's somewhat about the amount we overshoot. And this is just falling right into place here to come right back down. And the next chart, I'm going to show you why we might return all the way back to where we came from today. So here's what we're looking at here right now. Okay, definitely looking for selling opportunities. Okay, look for those selling opportunities. If the buyers are strong, though, you know, let's not forget, these bulls, you know, this world, things change all the time. If the buyers are stronger and they do push this thing higher, though, okay, you buyers, you're going to have, and again, it's got to be short-lived. You can't be too confident if you're a buyer right now here on gold. You just can't be. Not until we see a little bit more. Prove it a little bit more to me. I tend to give the trend and the type of scenario we're seeing. You know, nothing's changed, guys. We get FOMC later on this week. Nothing's changed. We haven't seen any groundbreaking developments, right? There's no wars breaking out. There's no crises, right, that might be interrupting this gold. So, okay, the buyers, if you want to take this thing higher here, be quick with it, right? Because you're looking at sellers now entering back into the market here up at these overhead resistance areas. So we'll be looking again right now. The easy money is sell. Wait for the trigger, but you're looking for the bears to take this thing back lower. Okay, if it does run this up a little bit, though, you know the sellers are going to be looking for another shot at this. So buyers, pick your spots. Take your money out of the market because, in my opinion, just the sheer fact that eventually we're going to come back to that moving average, that should be enough right there to tell you if you're a bull right now, your smartest bet is to wait for it to come back down and then be a buyer. So if we just jump up here, it's going to have to be on some serious strength to really get any real serious buyers involved up here, right? Or anybody who likes the money in their trade account. That's my plan on gold. Okay, that's my analysis on gold. Now let's have some fun with this. Okay, go. Yeah, you might want to get the kids out of the room for this one. This is one of those charts you look at, you go, how in the heck are we supposed to make any sense out of this? Okay, there's a spike in channel on this chart, and the spike in channel is what really makes it difficult. Once you identify the spike in channel, it all somewhat makes sense, relative sense, right? Okay, let's go over this real quick. This is a tough chart. This is going to be one of those charts you put on the fridge for mom at home because this is an A+ chart. You really got to know your stuff to be able to kind of pick this thing apart because the channel's not easy. It's not an easy one at first glance, right? A lot of them are really easy. You glance at them, you just know what's coming next. Here's a snapshot of what we're seeing here on the gold price action. This is a tick chart. Okay, a little more information. More information can be good, it can be bad. That's why I use two different types of charts, right? Get the big picture. Let's get the small picture now with some more oomph to it. Okay, tick charts. Now, price action. We're clearly bullish, right? I mean, unless you didn't look at a chart today, you missed the whole thing. But we were clearly bullish. And what really makes me suspicious is that we sat here for so long. And we just kind of sat here. And the market just, right, counting sheep here for a while. And then I swear, I thought it was a fat finger. When I saw it at first, it felt like that was a fat finger. It did on crude. It was like all of a sudden, bam, it was gone. I mean, literally just gone. I mean, look at this. This is only 10 minutes later, and look at how far we made. I mean, that thing took off. It took off and never looked back. You know, spike in channels are very common for news events, right? In fact, here at School of Trade, that's how we teach people to trade the news. You don't trade the actual news. The only way you can trade the news effectively is if you're in the market before the news comes out. Let's be honest. Okay? If you don't know that yet, just hold on tight. Don't put any real money at risk, and you'll learn that lesson on your own, right? I can help speed that lesson learning process up for you if you'd like here at School of Trade. But we know, though, you want to trade the news, you either got to be in before the news comes out or a spike in channel or a spike in ledge or a flag, right? You got to have some. You got to trade the reaction to that news, right? You're not going to trade the news itself, okay? Again, if you don't know that lesson yet, hopefully you don't lose too much money before you do learn that lesson. I'm going to hopefully help stop the bleeding for you guys. Here's a student at School of Trade. Okay, so here we are. We have a spike in channel. That's the most important thing here. The spike starts the party up. And then remember, it's always the same. A spike in channel starts like just a rocket ship up, and then it just kind of meanders, right? This very well behaved, right? This is a spike in channel. Okay, you also could have a flag or a pennant, right? A flag will go in the opposite direction. Same stuff though, right? Same stuff. Okay. Now what we know about a spike in channel is that once it begins to fail, it's going to go back to two areas: where the channel began and where the spike began. Okay, hence why I have some seller's targets here. Okay, let's keep going. So again, the spike in channel really is the foundation of this chart for the gold traders out there. Okay, so keep it in mind. Now, we have a target zone where the buyers must, keyword here is must, take control of this price action again, or the sellers will try to run it all the way back to where we began the spike. Okay, the fact that this spike in channels here tells us that we're going to take these highs here, project that out to these lows, and that's what gives us this battle zone right here. Now, this long-term channel is a complete fantasy right now until it's proven. The only reason why I'm putting it there is because you know there's going to be some bulls out here. They're going to use that. Again, I wouldn't even call that a channel yet. I would call this a complete just fantasy, right, of it being a channel. I'm not convinced yet there's a channel there yet. But you know there is going to be some people that will try to make that out to be a channel low, which means there's going to be buyers there. We also know that when this channel starts to tumble, we've already got this, right, short-term channel coming down. We're going to go right after that low. That's where the first bit of buyers are going to try here. If you're a bull right now, you need to wait patiently and then really get proof, right, that these buyers are here to stay before I'd be buying this thing. Okay, so you know the battle zone here. Talking about this battle zone. Again, if you're a buyer, you're waiting for it to come down, then wait for proof, and then get it going back higher, right? Look for a measured move. Okay, you heard me say it right now. Look for a measured move. They're really easy to find. Just measure it up. Okay, measured move if you're a bull. If you're a bear, though, very careful here. Very careful. They're not going to make it, most likely, they're not going to make it that easy on us where it's just going to go, okay, let's go, right? It's probably not going to be that easy. So here's what I'd be looking for. If you're a bear, I'd be looking for it to stumble around here, try to make a move. Don't take that fake out. I mean, maybe it just drops, and if it drops, right, sell the dips or sell the rips on the way down. Okay, you got plenty of room down here to get a couple nice, easy trades in short to get down to that seller target. You got plenty of room to get short here. What I'm talking about, though, is we come down to these lows, you're going to see some people, this is no guarantee, but this is what's likely to happen. They're likely to give it one try, and that's probably going to fail. Then they're going to trap in those buyers, right? One attempt to go higher, and then it will make its move lower. The bottom line is you got to be looking for some serious shenanigans in and around this 1195. Now, if you have no idea what I'm talking about right now, that should be clue number one to stop giving money to the market and get proper education, whether it be with me or somebody else. But find somebody you respect on the internets, right? Or go wait in line at Goldman Sachs and get a job there and see if they teach it to you, okay? There's more than one way to get educated. You can get educated by losing money, okay? That's the way I did it. You can get educated by meeting a mentor, right? Someone who's successful at doing this, or you can go work for a big investment bank. If you're like me and you get a rash putting on a suit and tie, right, then I think that takes one of them out of the equations. Okay? You're smart people, you know, right? Get some experience. But what I'm looking at here, though, is, again, expect a bull trap here, so wait for proof. Expect a bear trap here. Wait for a first attempt. Look for the second attempt to be the one that works. Okay? And then again, as we go higher, buying the pullbacks. As we go lower, selling those rips. I get some seller targets here. And that's why I said earlier, we may get a shot here to take this thing all the way back to where it came from. This is gold we're talking about, just like crude. It can make a big move like that. So now you know my plan on gold. A little bit tricky here on gold, right? A little bit of a trickster out there, this yellow metal. Now you know my plan. Don't forget, come out and see me tomorrow. We'll be trading this stuff in real time. Okay, how about the crude? Crude is kind of an easy one. I hate to break it to us, right? Wah, wah, wah. Kind of an easy one here on crude. So crude oil, what do you got for me? Kind of like gold, but not really. You can see this is really well contained. I mean, this moving average is flat as a board, right? Flat as a board right now. We're getting double bottoms. We're getting double. I mean, there's a lot of very convincing, and nothing's new, right? This has been happening for the past week and a half here on crude. Remember, guys, when you see stuff like this, you've really got to remember, stay away from the middle. And what do? You got it, right? Same to be last week, right? Fade those lows, fade those highs, right? As the price goes down, buy that sucker. As the price goes up, sell that sucker. So, okay, we know the idea is stay the heck away from $57 a barrel right now. It's going to be sloppy around that area, okay? That's where the sloppiest price action is going to be right now. Okay, my plan right now, almost identical to last week. Okay, buy the lows, sell the highs, look for those fake out breakouts. I'm telling you, on charts like these, just when you think, oh, this is going to be the one, just when you think, it's not going to be the one, all right? Trust me, the markets are built to take your money. What comes easy to humans is the wrong thing to do as a trader, okay? Keep that in mind. I talk about all this stuff all day long in our trade room. Okay, you don't need to be doing this on your own. But whatever you do right now, though, is be careful if you're a seller. Okay, you're probably going to get some short-term selling opportunities here down to those lows, but be careful. You get a measured move support level, little Control-C, Control-V, copy and paste it, bring it right on down. You can see there's your measured move support, right? So it's right around the old 56. Okay, so we know there's going to be some support down there again. I'm going to show you another chart next, which tells us we do have a short-term bearish trend here, right? Look, you can see there's definitely a lower high there. We're just not making much of a lower low here right now. In the big picture, we've got to be careful trying to sell lower than 56 right now, right? So sellers, take your money at these lows. Buyers, you can be looking for opportunities to buy those lows. If we go up, right? If we go up, buyers, careful buying towards the highs, right? Sellers, be ready to sell it back down. This is easy stuff, right? After looking at gold, this is like, I could just blindfold it. This is an easy one, okay? Even more on the easier side. Now, okay, this one gave you a little bit of a curveball here. There was an undershoot in this thing. But let's take a look at this here. Here comes my crude oil price action, okay? Again, different chart. Tick chart, not a range-based chart. There's different reasons why we use these charts. This chart gives me a whole hell of a lot more details, and I like that about these tick charts. On the other chart, that gives me more structure. Gives me an idea of where we are in the market. Okay, gives me an idea of the bigger picture. Okay, here we go. Definitely have a sideways range. Okay, definitely have a sideways range. Okay, double tops. Kind of a quadruple bottom there, give or take, whatever you want to call it, right? Flattening moving average, that gives it away. Overlapping candlesticks, inability to make a new higher low, however you want to say it, potato, right? And we know we have a trading range here. And that, boys and girls, is what gives me now this range expansion. 55.21, okay? Also, if you look closely here, there's another one down there at 53.88. Kids, write that down. Or just pause the video. Let's be honest, right? Gotta love the YouTube. All right, so now that we know we have a potential long-term target here. And I say long-term, it's not really that much long-term. I mean, heck, Joe, we're talking about, what, $1.50 here? Come on. But remember that other chart we saw where we have that major support there at 56. Okay, now we have the next one here, right? So there's your measured move, A, B, C, D, right? That puts us at 56. So likely, what's very likely is to find our way down to 56, then go back up, then go back, right? Inside this bearish channel. Okay, you're getting ahead of yourself, JJ. Back to planet Earth here. Stick to the plan, man. Stick to the plan. Okay, so we see a trading range and two bearish channels. We got the range. Channel 1, right, short term, okay, yep. Channel 2. This channel 2 is somewhat unconfirmed right now. Okay, what makes a good channel? Who's been watching my newsletter? What makes a good channel? There's three things, right? 45-degree angle. 4 total tests. You're good, you're good. 2 tests on both sides, right? So we got 3 tests, 1, 2, 3. We really need one more test on that bottom side to really call this a serious channel, right? A proven channel, if you want my opinion. So again, we're kind of speculating right now, but we definitely see that lower high. Now we're just waiting on that lower low. We're rotating off the highs, right? Rotating off the highs, high to low, low to high, high to low, low to high. We are rotating off that high, targeting that low. But the short-term channel, though, gives us a clue. We see an undershoot of the short-term channel. Okay, undershoot, undershoot, undershoot. We just talked about this. Undershoot leads to an overshoot. Usually it's something similar, craziness, I know, similar to the undershoot. Okay, now, it all depends on where we break this high, right? But the undershoot might be up there. It might be a little bit lower. It all depends on when we actually make a run for it. Okay, again, if you're a member of mine here at School of Trade, you know what I'm talking about. We teach this stuff to you guys in our intermediate course. So, the direction is clearly bearish. However, we want to sell at resistance on the way down. The undershoot tells us to expect the buyers to try run this up before it comes back down. Okay, so the undershoot tells us this trading range is for real, right? Like it's for real, like for real, for real. This is a for real trading range. Absolutely, you can see it, right? So the trading range, I'm trying to have some fun with you guys here. Tough crowd tonight. Trading range. We test the trading range lows. We see we have the undershoot. Now, you're probably saying, well, Joe, that's why we... Okay, I get it. The range low is why we have the undershoot. You're right. So expect price to try to go higher here before we get a shot at bringing it back down again. Okay? I'm definitely on the bear side right now, which means I'm looking to sell at resistance. Members, you know where to look for that overshoot resistance. If you're not a member, come out and see me tomorrow. I'll walk you through. I'll teach you all this stuff. Okay, so there is a TBD as far as where that resistance will be. We also know, right, so overshoot, okay, resistance, channel, range highs, yeah, right, okay. So we know sell at resistance, take profit at support. Sell at resistance, take profit at support. Support levels, 56, 54. Measured move target, 55. 56 is looking pretty tasty right about now, right, for you sellers. And, of course, if you want to leave a little bit of tidbit on there for a runner, something for the kids, right? You know what I'm talking about. Yeah, I hear you laughing. 55, I'm laughing inside, too. 55.21, something for the kids. 55.21 if you want to leave something on there for the youngsters out there. All right, guys? I'm trying to have some fun with you, as always. Trying to make you guys have some fun while you're working hard with me every evening. Guys and gals, that's my plan here. That's my plan. What do you think? You got some feedback for me? Don't just down thumb the video. Give me some feedback. Why am I wrong? Why am I right? I'd love to know more about your opinion. Okay, I'm not the only person with the opinion here on the interwebs. Give me your opinion. Post a combo video here on YouTube, right? Or send me an email. I'm JJ at School of Trade. Don't forget, download today's charts. Grab your free pass. Come out and see me tomorrow on the Trade Room as a guest. Register for our nightly newsletter mailing list. And if you happen to stumble over here to SchoolOfTrade.com. Don't forget, we get the best trial in the business, guys. For free $99, you're going to learn more with me in 1 week. That's right, 7 days. You're going to learn more with me in 1 week than anywhere else on the interwebs. I can promise you that. And I even have a team here standing by here to help you guys out as well, right? Keep in touch. If you need help, contact the office. I'll see you guys for the newsletter. Same time, same place tomorrow. We're just getting this final week of April cranking up here. And I'll see you guys as members tomorrow morning at 8 a.m. Eastern time. My name is Joseph. Hope you guys had a great weekend. All right. Dust off those cobwebs. Got a busy week in front of us. FOMC's coming on the tail. I'll see you guys tomorrow. Adios, amigos. Bye for now.